Candle Range Theory Trader, just with you for a fun video, just some hot takes, nothing too serious. So let's just get into it. All right, just sharing my opinion on some of the things I've seen in the trading space. Could be wrong, feel free to disagree. Like I said, just for fun. So, number one, most people should be investors, not traders. Now, this is not to dampen your hopes of being a trader. Obviously, if you watch this channel, you want to be a trader. At the same time, though, in terms of the odds, let's just be honest. And for myself included, I'm gonna be honest. Like I've made more money investing than I have trading. Like that's just honest. Have I made good money trading? Of course I have. At the same time, though, parking your money in a like a stock or some sort of crypto project or whatever, a solid crypto project, and just letting it sit there is honestly going to make you more. The odds of you making more money on that, even a basic index fund, the odds of you making money on that than you constantly day trading or swing trading are better on the investor side. That's just the numbers. Most traders don't make money. Now, in this field, you want to be that talented exception, that talented 10th, that 1%, however you want to put it. And is it possible for you to make money as a trader? If you persist and can master risk management, yes, I believe it. It's just that if you want the best odds to make your money for you, just be an investor, find a safe place to park your money and forget about it. And 9 times out of 10, you're going to end up with more money than you started with. So that's why I say most people should be investors, not traders. But we're not most people here. Okay, to be a day trader, you kind of got to be a little unhinged. Number two, 1% risk is a waste of time unless you have a lot of money. That's generally the rule in trading. Risk 1%, risk 1%. The thing is, a lot of people who say that, they're starting their account with $10,000, $20,000, $50,000. If you have a $50 account, a $100 account, 1% risk is not, that's not, I mean, even the federal minimum wage in the United States is $7. So if you risked 1% of a $100 account, and you got say 1 to 5, that's $5. Okay. Now obviously, yes, you can compound it, but you're not even making minimum wage for like a trade. Now, that's not worth it, at least in my mind. You don't get into trading to not make, I don't want to say a lot of money, but you want to do at least as well as you're doing at like say a job. Right. Now I understand everybody has to start somewhere. And I do believe that we should get to the point where, yeah, 1% risk is like the goal. But it's like if you don't have a large balance, if you don't have a large amount of trading capital, again, my opinion, don't bother with 1%. It's just, no, a lot of people always consider the source. So that's what I say. A lot of people who risk 1%, they're already financially set. So that's why they say that. For the rest of us, might have to do something different. Okay. Number three, pot farms. They are casinos. Okay. If you know how a casino operates and how they figure out how to extract as much money from people who go into them as possible, prop farms are the exact same way. Now, can you get paid from prop firms? Of course you can. We've all seen people posting their payouts, and even I've gotten payouts from prop firms. Was it sustainable long term though? No, not really. And plus, they can deny payouts. They can do really whatever they want. It's not like it's very much a regulated industry. So they do the math. They have these consistency rules, max daily losses, max lot size. You think they don't? They don't go into this thing hoping for the best. They've done research. They've done mathematical equations, and they put the odds in their favor before they even throw up a website to let you sign up for a challenge or an instant funding account. They already know that the majority of traders are not going to get a single payout. They know that. And what do casinos know? They know that most of the people who walk in that casino and put their money in for blackjack or roulette or poker or whatever else, they're not going to win anything. So I'm not saying prop firms are bad. Just know who you're doing business with. Okay, that's all I'm saying. Number four, trading one pair is a horrible way to trade. Now, why would I say that? And I've tried this. The reason I say that is because I'm more of a price action trader, meaning that I'm looking for the behavior of a pair, and that's what determines whether or not I take the trade or not. If you're just trading one pair, my thing is, okay, how do you know what that pair is going to do on a daily basis? Like, are you like predicting? Are you like studying? See, people say, oh, no, I understand what the pair is going to do, and I know how it moves. Okay, well, what if the pair is in consolidation for like a month? What are you doing? Are you trying to scalp? Are you like, what if it just barely moves at all? You don't have any option. You've limited yourself. I don't get that. like trading one pair is just a complete waste of time to me. I just don't understand how people do that. I like the better approach to me at least is to have at least like say seven. You know, I look at all the majors and all of the crosses. That's what I trade for the forex market. However, even if you don't want to do that, I would recommend at least like 5 to 7. That to me makes more sense than just like one pair. To me, I don't understand why people do that. So that's just me. Next up, risk management does not get the respect it deserves. And I had to learn this the hard way. I didn't respect it even myself because I was so much focused on what patterns to look for and this, that. That's the easy part. Some people talk about psychology. Nah, risk management to me is if you want to talk about what do they call it, holy grail of trading, it's risk management to me. That's what's going to get you paid as a trader. That's what gets me paid as a trader. Mastering the art of keeping losses small and making sure winners are big. That should be more respected than, oh, this candle did this and I entered here and got out here. I mean, anybody can do that, but can you manage risk? Can you grow capital? Everybody can't grow capital. Anybody could trade. Anybody can even get lucky. But managing risk consistently, that's when you know you're doing something. Number 6. This might be a little controversial, but this is what I believe. Everything works, nothing doesn't. When I first learned trading from one of my former teachers, I'm not going to name the name in this case, but they made the assertion that the way they trade is pretty much the only way that you should trade the forex market, and everything else you should throw in the trash can. I don't believe that. Now, I was new, so I believed it because I didn't know, I didn't know anything about trading. So I took him at his word. But now I'm at the point where something I heard Jack Swagger say, who's the author of Market Wizards, he interviewed real life Wall Street hedge fund traders, etc. And he said one thing he found and these people with verified returns, and he said none of them trade the exact same way, and they're all successful. Some of them use strictly fundamentals, some of them use indicators, some of them use price action. They all have their own thing, and they're all successful. So I believe with proper risk management, you can make just about any trading system work. That's just what I believe. Everything works, but not trying, that definitely doesn't. That's my opinion. Okay, number 7, win rates are nothing to brag about. Why would I say that? Because people who have a consistent win rate, number one, it can be a trap. If a person has, let's say, an 80% win rate, let's say for a month, they've won 80% of their trades, I promise you they're going to start feeling like they can't lose. And as well, they let ego and pride get in the way. They're going to have a harder time to admitting that they're wrong on a position because they're so used to being right. There's nothing that says that just because you win 80% of your trades one week or 1 month, does that guarantee you're going to win 80% of your trades the next month? No. There's no guarantee of that at all. Right? But if a person has, and just to circle back to risk management, if a person has a consistent habit of getting, say, 5 to 10% of his or her money on we'll just say a weekly basis, that's worth bragging about. Not I won 90% of my trades. Because even if I open a position, it goes up, let's say $2 and I close it. Isn't that a win? Right? If it goes up 5 cents and I close it out, for as long as I'm not losing, I'm winning. Doesn't that contribute to my win rate? So I don't care what a trader's win rate is. I care about how big are your losses and how big are your wins. That's what I care about. You can have a 35% win rate, and if you have enough capital, be a millionaire. If you have enough capital. And how much money you're making, that's the only thing that's worth boasting in. Not, I win 90% of my trades. That's just, but that's just me, my opinion. All right, a couple more. Number 8, Forex to me is the best market to trade, period, point blank, hands down. The number one reason I say that is because, let's be honest, a lot of people, the barrier to entry in some of these markets is higher than others. And I believe Forex, thanks to the leverage that you can get and the variety of instruments that you can use, I believe it's the best market to trade. When I actually first started trading, I started with penny stocks, but the financial commitment was too high to get a big enough position. Because some penny stocks would be like $2, some would be $1. I think the term is any stock under $5 is considered a penny stock. I'm not 100% sure on that, so don't quote me. It's just that if you want to get a big enough position in a $5 stock to make it worth your while, you got to have a decent amount of upfront capital with no guarantee of the trade winning. Versus Forex, I promise. In Forex, it doesn't take much to take a little and turn it into a lot. It's easier to me than the stock market. To me. So like I said, Forex to me, because of this low barrier to entry and the leverage that's available, to me is still the best market to trade. Even with the spread broker spreads and all that, you just kind of got to be aware of that. I know it's not perfect, but I do believe it's the best. Number 9, too many traders do not take withdrawals. This one blows my mind. I think it's a crime that a person can take an account up to, from let's say $100 up to $5,000, and they don't pull out a single penny. Not even their first $100 they put in, and eventually blow the whole account. Why would you just wasted you wasted your time and your money? Why would you not at least get on house money? That should be the bare minimum. If you put $100 into an account and you turn it into 200, at least take out 50 to 100. Then you're trading the broker's money. And if you blow that, you didn't lose anything. You just start over. So that enough said on that. And last but not least, if you have a theory on price action, you really don't need indicators. That's my opinion. I know some people like to trade naked charts. I do not exactly, only because I like for my levels to be automatically marked. So I like to see the high of the day, the low of the day, and the daily open price, if nothing else. So is it necessary that I put that on the chart? No, but I'm a fan of automation. But again, I don't really need to have like EMAs and RSIs and the TDI and Bollinger Bands and you name them. There's lots of different indicators out there. But it's just that at the end of the day, because of the levels that I trade at, be it either the prior day high, prior day low, or certain candle ranges, all I need is the top and bottom of any given candle. That's what I trade off of. So why do I need an RSI? I really don't need a TDI, an EMA, or any of that stuff. To be honest with you, it's just not necessary because I'm just looking for price to do something at a certain level. If it does it, I win. If it doesn't do it, I lose, and that's it. There's no indicator that can really help me predict or determine whether or not price is going to do what I think it's going to do. It's just I just respond to what I see price doing in real time to the best of my ability. So because of that, did I used to use indicators? Yes. And again, like I said, everything works, nothing doesn't. I just believe that sometimes people put a little too much faith on indicators. And trust me, if you show me an indicator that works 10 times, I'll show you 10 times where it hasn't, or it's failed, or it's lagging, or it just doesn't do what you think it would do. So to me, they're just not necessary. I like price levels more than anything else. So those are my hot takes. Agree, disagree. Like I said, just a little informal video. Everything can't be all serious and all that good stuff. So just wanted to throw those out there. And if you have some, feel free to share them in the comments. Your hot takes. If I see it, I'll respond. But this is a crazy business that we're in. Try not to take it too seriously. You only live once, so like I said, try to enjoy what you're doing. All right. So I appreciate your time and attention. Hope you have a great rest of your day and take care.